I published a new blog post on July 14th discussing some of my recent trades. A link to my blog post, which I started to publish in October 2008, can be found in my profile section here at YouTube. I'm going to highlight later in this video some events that are factoring into my asset allocation decisions now. I wanted first to mention here the steep decline in IBM stock price last week in response to its preliminary earnings report and guidance. I do not own the stock. IBM closed last Monday at $290.23 and at $217.07 the next day, a decline in one day of $73.16. The stock continued to drift down thereafter, closing last Friday at $212.67. This is what happens when a single earnings report and guidance calls into question the earnings growth trajectory built into a stock price. And the growth trajectory that had been built into the IBM stock price prior to last Tuesday was nowhere near as close to the optimistic forecast embedded in the stock prices of major market leaders that have led the stock market higher. The kind of price collapse in IBM stock last week was common in 2000 and 2002 in a what I term then and now as a massive valuation reset of approximately 50%. And the S&P 500 index level that took stocks back into what I considered then to be at the top end of a reasonable valuation range. In July, I have been buying 20 of the 6-month treasury bills each week at auction and will continue doing so for the next 2 auctions, including the one to be held on Monday and the Monday after that. The bills mature in January 2027. When held to maturity, which I always do with treasury bill purchases at auction, the interest income will be taxed in 2027. I am shifting income tax recognition of income into 2027 to avoid moving into a higher marginal tax bracket this year. And I'm on a trajectory already to do so. I am also buying close to 20 investment-grade corporate bonds each week, which is likely to continue well into August. Most of those purchases are in corporate bonds maturing in 2028, where I'm picking up an average yield to maturity near 4.4 to 4.5%, which has been moving slightly higher recently as investors price in more Fed rate hikes into short-term yields. I am attracted to those kind of yields for high-quality corporate bonds since the total return is a precise number to the penny, assuming no defaults. And that return meets my financial objectives now after income taxes. I'm reducing my stock allocation at a $2,000 to $5,000 pace each week, and I'm close now to my annual goal of realizing $25,000 in realized gains, which I view as a supplement to my dividend and interest income. My primary concern about stocks now is their historically high valuations and the strong earnings growth trajectories lasting for years and even a decade or more for some of these stocks that are already built into the stock price. And when that happens, as it did in 2000, disappointments in the trajectory will lead to major index valuation resets, and even reasonably valued stocks will decline in the powerful downdraft that follows in those kind of responses to disappointments of the major stocks. Another concern is the Iran war. I mentioned in a video published here in June 13th, starting at 7 minutes and 7 seconds, that the IRGC was undertaking actions a day before the signing of the MOU that indicated that this organization or some powerful faction of it was not on board with the MOU and would continue attacking ships in the Strait of Hormuz. I will link that video in the More section below. Actions speak louder than words. Subsequent events have proven that the Iran war and the disruption of shipping through the strait is continuing and shows no signs of ending. There is just no telling how long this war will last. While Trump said last week that the strait was open, that is clearly not the case, and his words, contrary to what he may believe, do not actually create a reality that does not exist other than only in his own mind. Gasoline and other energy commodities started to accelerate in price last week in response. Another concern is that Trump is already starting to impose more tariff taxes on U.S. companies that import foreign products using a different law than the one used to justify the tariffs that he unilaterally imposed that were struck down by the Supreme Court. The first tax levied by the Trump administration is a 25% tax on exports from Brazil. Even though the U.S. has a trade surplus with Brazil, Trump had earlier imposed a 50% tariff tax on Brazil's exports, which were included in the ones found to be illegal, and made it clear at the time he imposed that tariff tax on U.S. importers that it was being implemented unilaterally by him as a punishment for Brazil trying and then convicting its former president, who was one of Trump's buddies, at instigating a coup after the last presidential election in Brazil. Brazil is having another presidential election in October. I believe it's in October, with the son of Trump's buddy running in that election. Trump may now be trying to influence the outcome in this upcoming Brazil presidential election with his tariffs on Brazilian exports. The fact that U.S. consumers will be paying higher prices is irrelevant to those in power of the U.S. government now, who will even deny that U.S. consumers pay any of the Republican tariff taxes imposed on U.S. importers. The new tariffs are being implemented under Section 301 of the Trade Act of 1974 that has a firmer legal basis than his previous tariffs found to be illegal. Trump has stated that he intends to impose these tariffs on a very large number of countries, notwithstanding some of those countries having already agreed to a new trade deal and made concessions to Trump in order to secure those deals. By firmer legal basis, I am saying that the tariffs are not factually justified, but the Supreme Court justices and other Republican justices in the lower courts will give deference to the findings made by the Trump-appointed trade representative of purported unfair trade practices and policies. So, in that sense, the factual findings could easily be bogus in reality, and even obviously so, and nonetheless be upheld in the courts, particularly by the Republican judges and Supreme Court justices, who would give undue deference to decisions made by Trump and his flunkies on any subject matter. I would add that if he does proceed to impose new tariffs on countries that had already made concessions and new trade deals, this will simply reemphasize and prove beyond any doubt that for those leaders in those countries that Trump is 100% untrustworthy. And if you give him any kind of concession, he will just be coming back for more and more and more, and there will be no end to it.